Now let's get your tax-related queries answered. I have Arnav Pandya, founder Money Edu School on the board, and I also have for your mutual fund portfolio-related queries Shweta Jain from Investography, who will be answering your mutual fund-related questions. Good evening and welcome to both of you. Arnav, I'll come to you first because we have a lot of ITR filing-related queries. First is from Sridhar, and he wants to know about his daughter and how the ITR filing should go on depending on the new or the old tax regime. The gross income for her daughter last year comes around 6,66,081, and considering standard deduction and all the professional taxes, the amount comes down to 52,400, and investment under section 80C that's been claimed is 57,142. Taxable income comes around 4,97,139. Tax on total income comes around 12,357. Now he wants to understand, based on this calculation, whether the new tax regime or the old tax regime is beneficial or it's smart enough to opt for.
So if we look at the entire structure of income which has been earned and the deduction which have been claimed, one has to know that if you are going or sticking to the old tax regime, you get the benefit of various deductions, including Section 80C. While if you are in the new tax regime, you do not get these Section 80C and other benefits, though you still get the benefit of standard deduction. So first, let us look at the situation from the old tax system. The income is around 6.06 lakh, which when you reduce the standard deduction, the professional tax, it comes to uh, another 52,000 of deductions. Then you can claim section 80C also, by which time the income, taxable income, comes to 4.97 lakhs. Now, there is additional benefit available in the form of section 87A, whereby if your taxable income is below 5 lakhs, then the tax to be paid up to a sum of 12,500, you can uh, claim this as a rebate. So this is a rebate under section 87A. So under the old tax system, since this qualifies for that rebate, that final tax liability is zero. If you look at the new tax regime, what will happen is that the taxable income will not have the deduction of section 80C, which means that it will fall above the 5 lakh mark. Now, the moment it is above the 5 lakh mark, the benefit of section 87A is not available. So clearly, you will have to pay tax under the new tax regime if you try and file it under that system. So for this case, the old tax regime is a better option because ultimately your tax liability will be nil due to the rebate under section 87.
The next viewer online is Mr. Kalpesh Shah. He's on the phone line with me. Kalpesh, hi, good evening. How are you doing? And you can ask your question to Arnav.
Uh, Good evening. Myself, Kalpesh sir.
Yeah.
I have a query that my wife has received few 6 lakhs rupees after my father-in-law, death of father-in-law. So how I can show this 6 lakhs amount as a gift or as
Okay.
a means how that I cannot able to fill the form in the ITR.
Got it. Got it. Arnav?
So what has to be shown in the income tax return is income. Now, the amount which has come is not an income, but what will happen is that only if the amount which has been received, if that generates income, then the figure of the income which is earned has to come in the income tax return. In this case, the amount which has come to Kalpesh by his wife need not be shown in the income tax return because this is not actually income as per the definition under the Income Tax Act. So in this case, all the other details of income will have to be shown and the return filed. Now, once this amount has come in, if this amount has been invested, or even if it is put in a fixed deposit, it has been invested in a mutual fund, and some income arises from it, that part has to be shown in the income tax return, not the amount which has been received.
We have one more ITR related query from Rajiv and Arnav. Rajiv wants to understand as to what kind of form or what kind of ITR form can he opt for salary plus, as in salary plus interest income of 53 lakh. That's the amount he's talking about. Arnav.
So if you look at the various forms which are there, if you look at form ITR1, then anyone who has income from salaries, who has one house property and income from other sources, which is where the interest income falls, can do it only if their income is less than 50 lakhs. In this case, since the salary and the interest income goes above 50 lakhs, ITR2 will have to be used, and that return will have to be filed where these income will have to be shown under the appropriate heads.
Just one last question quickly from Ram Kumar, and he has a doubt regarding ITR form, and he wants to know that which ITR form can he use to file income tax filing. He's a salaried person less than 20 lakh and has capital gains from shares. Which ITR form he needs to go for both of these income?
Once again, it's the same thing, that even though in this case the salary income is less than 50 lakhs, there is an addition of capital gains. If you have capital gains and if you have salary, you cannot use form ITR1 and you will have to use form ITR2. So in this case too, ITR2 will have to be filed where the appropriate capital gains has to be shown under the section and the salary under its head.
All right, I think for today we have to end the show itself. Shweta, we do have a lot of questions, but unfortunately the time is up. And thank you so much, both of you, for being on the show and helping our viewers with every aspect of the financial planning. Time to wrap up the show, but then I'm going to leave you with our WhatsApp number and our email ID. And do not forget, we have ITR Pathshala special series going on ET Now, where you can send us your ITR filing related last minute queries. If at all you're stuck anywhere in your filing process, do WhatsApp your question to us on our WhatsApp number, and you can also email us your queries, and we will get you sorted by our experts. Thank you so much for watching. Goodbye.